Welcome to our Hong Kong Brief Show. I'm your host, Jenny. Today, we're diving into the exciting world of finance, technology, and weather. First up, Asian shares are on the rise, fueled by optimism that the U.S. Federal Reserve might cut interest rates soon. Markets are buzzing with anticipation, expecting nearly 3 rate cuts by the end of the year, which has also lifted Wall Street to new heights. Investors are eagerly awaiting U.S. jobs and inflation reports that could influence future Fed policies, while bond yields and energy prices respond to these shifting expectations. Next, Hong Kong stocks are soaring, reaching their highest levels in almost 4 years. Thanks to the Fed's possible rate cut, the Hang Seng Index jumped over 1%, with big names like HSBC, Alibaba, and Tencent leading the gains. The market sentiment is so positive that traders now see an almost 90% chance of a rate cut at the upcoming Fed meeting. Meanwhile, U.S. markets remain strong, and regional markets show mixed results, with Japan and South Korea climbing higher. It's a lively time for regional finance. Lastly, on the weather front, Hong Kong showed its resilience by skillfully handling Typhoon Tapa. Thanks to good preparation and experience, the storm caused minimal damage, with fewer injuries and disruptions. Meanwhile, in other news, experts express concern about Hong Kong's tourism industry, saying it needs to embrace more AI and digital technology to stay competitive. From smart tourism to tech adoption, there's plenty to watch as Hong Kong aims to be a global leader in innovation and resilience. Please continue to watch for more details. According to the Associated Press, Asian markets experienced a mostly positive trend as investors' optimism grew over the possibility of the Federal Reserve cutting interest rates in the near future. Japan's Nikkei 225 saw a modest increase of nearly 0.3%, while Hong Kong's Hang Seng surged by 1.2%, reaching levels not seen since October 2021, driven by expectations of a rate cut. Wall Street also maintained its momentum, with the S&P 500 and Nasdaq reaching record highs, buoyed by the inclusion of new companies like AppLovin and Robinhood in the S&P 500 index. The markets are abuzz with anticipation of upcoming U.S. economic data, which could influence the Fed's decision, especially as recent reports hint at a slowing job market and inflation figures that might challenge the central bank's stance. Bond yields declined as investors bet on rate cuts, and energy prices edged higher, reflecting a cautious yet optimistic outlook. The South China Morning Post reports that Hong Kong stocks soared to a near 4-year high, propelled by the widespread belief that the Federal Reserve will implement a rate cut this month. The Hang Seng Index climbed 1%, with significant gains in the tech sector, including Alibaba and Tencent, which saw increases of 2.4% and 1.1%, respectively. Market traders have priced in an almost 90% chance of a 25 basis point reduction at the upcoming Fed meeting, further fueling risk appetite in the region. Amid this bullish sentiment, HSBC opened its largest wealth management center in the world atop the ICC, a move seen as a strategic effort to tap into Hong Kong's burgeoning wealth management industry. The new facility, situated on the 99th floor, offers extensive amenities for high-net-worth clients and underscores the city's ambition to become the leading cross-border wealth hub by 2030, despite ongoing challenges in the office property market. In a related development, the South China Morning Post highlights HSBC's strategic expansion in Hong Kong's real estate and wealth sectors. The bank's new high-altitude wealth center at the ICC not only symbolizes its commitment to serving Asia's wealthy clientele but also aims to bolster the city's office leasing market, which has shown signs of recovery after a prolonged slump. The center's impressive size and location reflect a broader trend among financial firms seeking premium office spaces with sea views to attract private banking clients. This move comes amid increased demand for high-end office rentals, as evidenced by recent leasing deals such as FWD Hong Kong's decade-long lease and Jane Street Asia's significant office space acquisition. The government's support for Hong Kong's status as a global wealth management hub, combined with a rebounding stock market and active IPO scene, is expected to sustain this growth trajectory, despite uncertainties in the broader economic environment. South China Morning Post reports that Zuoko, a Michelin-starred Japanese restaurant nestled within Macau's Grand Lisboa Palace Resort, is a culinary sanctuary where head chef Yoshinori Kinomoto masterfully blends tradition with innovation. With a remarkable 30-year career rooted in Osaka and Ishikawa, Kinomoto's capo-style cuisine emphasizes the purity of seasonality, sourcing pristine ingredients directly from Japan's trusted producers to ensure peak freshness. His signature dishes, such as the deep-fried F5 Wagyu tenderloin, exemplify his meticulous approach, slow-cooked to tender perfection, then coated and fried to amplify its rich flavors, complemented by aromatic sansho leaves. The restaurant's intimate 9-meter cypress wood counter, crafted from a centuries-old hinoki tree, fosters a visceral connection between diners and chefs, allowing guests to witness every slice, grill, and plating in real time, creating a genuine exchange of trust and culture. Kinomoto's philosophy champions simplicity and respect for ingredients, transforming each multi-course omakase into a multisensory voyage that celebrates Japan's culinary heritage, enhanced by carefully curated sake and wine pairings. Achieving its first Michelin star this year, Zuoko stands as a testament to Kinomoto's dedication, the craftsmanship of his team, and the profound connection between chef, producer, and diner, an authentic haven where the essence of Japanese seasonality and craftsmanship is vividly brought to life in the heart of Macau. According to the Associated Press, the recent earthquake in Afghanistan has left a trail of destruction with over 5,200 homes obliterated and hundreds more damaged across 49 villages. The UN's assessment reveals the immense challenge faced in evaluating the full extent of the devastation, primarily due to the treacherous terrain and damaged roads in the mountainous east where the quake struck. The region's rugged landscape and relentless aftershocks have hampered rescue efforts, leaving many villages cut off and families displaced, wandering with scant belongings and seeking shelter under open skies or in crowded tents. The region faces a looming humanitarian crisis, with contaminated water, a high risk of cholera outbreaks, and the imminent threat of winter snow and landslides further complicating aid delivery. Despite the Taliban's cooperation in rescue operations, the urgency for clean water, food, and shelter remains critical as the UN prepares to appeal for emergency funding, emphasizing that without immediate intervention, many communities may not survive the harsh winter. The South China Morning Post reports that Hong Kong's recent typhoon Tapa, despite its relatively mild impact, showcased the city's resilience and preparedness in handling extreme weather events. After nearly 16 hours under Typhoon Signal Number 8, the city swiftly returned to normal, with minimal injuries and flooding, thanks to prior lessons learned from past storms like Saola and Mangkhut. The government's proactive communication, including early alerts and timely suspension of classes and transport, helped minimize chaos and economic disruption. While some infrastructure damage occurred, scaffolding collapsed, lamp posts fell, and a few flights were delayed, the overall response was praised for its efficiency, reflecting Hong Kong's ongoing efforts to adapt to increasingly severe weather patterns. The experience underscores the importance of early information dissemination and coordinated action, reinforcing the city's resolve to improve its resilience against future climate challenges. The South China Morning Post also highlights concerns about Hong Kong's lagging adoption of advanced technology within its tourism industry, which could hinder its ambitions to become a global smart tourism hub. Experts argue that low AI literacy and limited use of innovative tools restrict the city's ability to attract and serve international visitors effectively. Despite the government's 2024 development blueprint, many operators and guides remain entrenched in traditional practices, lacking the skills and access to AI-driven platforms like TikTok or Google's AI assistants, which are vital for reaching younger, global audiences. Furthermore, the city's limited engagement with digital assets like cryptocurrencies and stablecoins diminishes its potential to tap into emerging markets of tech-savvy youth worldwide. Experts advocate for increased investment in AI education, digital infrastructure, and ecotourism technologies, emphasizing that embracing innovation is crucial for Hong Kong to stay competitive and fully realize its tourism potential amid a rapidly evolving global landscape. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.